Hello, Howard Deal here from the General Agency, and today I'll be talking to you about health plan deductibles. The deductible is the amount that the insured pays before the insurance company begins to pay a claim. Some health insurance policies will charge the deductible if a patient is receiving treatment. For example, at a doctor's office, if a patient goes into a doctor's office and pays the doctor office copay, and the doctor performs a form of treatment in that office visit, that actually can apply to the deductible. The most common deductible is the calendar year deductible, which runs from January 1st to December 31st. There can be two separate deductibles for in and out of network depending on the plan design. So be sure and check your certificate of coverage. If you have an in-network deductible and an out-of-network deductible, and you choose to go in and out, they'll be two separate. Those don't cross over. Now, if you have one of the policies that has a deductible that's combined in or out of network, that's a single deductible for in or out, that'll actually show on your certificate of coverage. The deductibles can also be limited to 2 or 3 times for a family. So if you have a policy that has a family of 5 on there and they get involved in an accident, and let's say, for example, it's 2 times for the family, only 2 people in that family will have to meet that deductible, and the rest will fall straight into coinsurance or the maximum out of pocket, depending on where they are with their claim. If somebody has the 3 times for their family, only 3 family members will have to meet a deductible before the plan begins to pay in the coinsurance level. Okay, so let's take a look at a sample surgery here. Let's say that we have a surgery cost $30,000. The insurance company does not pay the deductible. That's the insured's part. So the insured will actually pay the $2,000 deductible, and the insurance company will pay nothing at that point. However, after the deductible is met, the insurance company will, in this example, will pay 80% of the claims. I'm showing an 80-20 in-network split here. So assuming the in-network coinsurance is 80%, the out-of-network coinsurance being 20%, the insurance company would have paid out $22,400 for the claim, and the insured would have paid $5,600 for the coinsurance. Now, the maximum out of pocket, assuming that we have a $5,000 maximum out of pocket on this plan, since the $5,600 is actually higher than the $5,000, that $600 would actually fall back onto the insurance company's portion. So in a $30,000 claim in this scenario, the insured would pay $5,000 because it'd be $2,000 for the deductible, 20% coinsurance, maximum out of pocket is $5,000. The insured pays $5,000. The insurance company would have paid out $25,000 on this claim. Now, this is also assuming that the maximum out of pocket includes the deductible. Some health plans, that is not the case. So be sure and check your certificate of coverage there. Also, the calendar year deductible, and I'm going to run through this timeline because there seems to be some confusion on the deductible. If an insured has a claim during the current year, let's say this current year, and they file a claim November, December timeframe, and they've met their deductible, and they've even met their coinsurance out-of-pocket limit, January 1, that deductible starts again. Okay, so if we're back to the insured that had the $2,000 deductible and they met it during the current year, January 1, that deductible starts over. They could actually have to pay another $2,000 January 1st. So that's something to be aware of on the timelines. Remember, if you have any questions, please contact a broker or feel free to contact us at the General Agency. As always, some rates, conditions, and exclusions may apply. So for more information on your plan, please take a look at your certificate of coverage.